Someone once said to me about investing, there's like a bar of soap. Every time you touch it, it diminishes.
Yeah.
Uh, do you say to people, you cannot predict every ebb and flow of news cycles, of markets, that the secret to investing is to take a long-term view? What do you think is the most appropriate horizon for me with my €1,000,000 in terms of saying, I'll come back to you in X years' time?
Yeah, it's a good question, okay? And I have sympathy for the view that m- touching stuff is bad news. And this is this over trading because human beings are wired for defense or wired for survival. We're not wired really to survive the volatility of financial markets. So what you need to be careful of is that you're not overly trying to time markets. So there's two types of alpha. What's alpha? Alpha is outperformance, okay? How do you generate alpha? Generally, it's through superior stock selection or it's market timing. You can get the stock selection or the asset selection right. Market timing doesn't work. All the academic research has shown that. But to counter that, we would look at 2022. What happened when investors were stuck in bonds and stocks? When if you had an active approach, it was as clear as the nose on my face that interest rates were going to 5%, get out of them and get into cash. And we did that for some clients.
Um, when people speak about building a portfolio, what does that mean?
Okay, so portfolio construction is really about building a robust, resilient portfolio to different economic regimes. So what do I mean by economic regimes? Generally, if you have an understanding of what's going on with economic growth and inflation, you're doing okay. They're the two main forces. So growth can either be trending up or down. Inflation can either be trending up or down. And you notice I didn't mention the level. What matters is the rate of change, okay? So I'll give you just 4 different environments. Growth going up, inflation coming down. That is a good environment for equities, stocks. Why? Because the economy is growing strong, earnings are good, profits are good, and people are spending money. That's a good environment. But more importantly, this is the point people miss, central banks are not raising interest rates when inflation is falling. So what you're trying to watch is what's the central bank going to do? Don't watch the assets, watch what the central bank is going to do. And it follows in that you get through, that's a good environment. Then you get into a potentially inflationary environment because at the peak of the cycle, things become expensive, you get euphoria, and and then wages rise, and then things fall, and you get into a stagflationary environment. And what happens in a stagflationary environment? Central banks raise interest rates, they kill the economy, and then you get the recession. So having an understanding of what's going on in the economic regime is key.